All right, morning everyone. Let's kick it. All right, last night's session in the States was kind of a bit of a non-event. At one point we were kind of drifting up higher earlier, and the session kind of came down and closed more or less around flat line on most of the indexes. It's actually quite a good result, I would say. Probably have to call that a real win for the bulls, simply just because we ran so hard up into new all-time highs, or within inches of all-time highs on the S&P, and the market's able to hold on to the gains. I think that's actually a very, very positive sign. A few things going on that I think are significant. $80 being convincingly dropped on the oil price. We continue to see physical commodities come in. This is it's a theme that's been running for a while, and I think that's one that you probably have to stay on until it stops. A lot of guys calling it down to sub 70 by the beginning part of the year. We had the PMI numbers in the States yesterday. Obviously we got them around the globe yesterday, but the PMI numbers in the States were very convincing and very strong, obviously. So we continue to see the same theme there. We continue to see the U.S. data come out significantly better, with the rest of the world being somewhat mixed. And because of that, we continue to see dollar strength. It's just the theme that continues to play on over and over and over and over. And so actually kind of creating another issue possibly in the near term with the Fed, because as the dollar strengthens like this, it's going to make it harder and harder for the Fed to start raising, because if the Fed starts raising, the dollar's going to get even stronger, and then that's going to in itself create economic headwinds for the U.S. So I think that we could see some interesting things coming. Obviously, these currency weakness around the globe against the dollar, and that affects things as well. If we look at what happened in Asia overnight, we saw the Nikkei rip off another 4%, which is quite spectacular. It's all the way down to 2.7% at the moment. It was up as much as 4% earlier this morning. The yen absolutely blowing out again versus the dollar. I think what we're seeing here is we're seeing the end of the carry trade against the US dollar, and I think we're seeing it move into the Japanese yen and the euro, probably where it should have been the whole time. But the guys had a free ride against the dollar for so long, people just tended to sit in it. So we're seeing against the yen absolutely getting blown up, looking like the Eiffel Tower at the moment, but a lot of people calling for significantly lower levels in the yen. In Shanghai, we had small losses, no real leadership there. And then in Australia, we actually had miners outperforming, which is quite spectacular to see that. Yesterday we had a miners outperform here locally, which was also really strange, considering the total opposite being on Friday, where markets went 1,000 points and mining stocks couldn't even get in the green. So a little bit confusing action there, but that's what we got nonetheless. Right, going into the charts of interest today. Similar to the type of chart that we looked at yesterday, this one also, I don't think this one is as much of a surprise. We saw a long period leading up to maybe 08, 09, where emerging markets probably had almost double the rate of annual performance of the S&P 500. And, you look at what's happened in the last 5 years now, and it's a dramatic divergence in the other way, where the S&P totally outperforming the rest of the globe. What's interesting about that as well is that it's not really being done on significantly higher multiples. If you look at South Africa for a gauge, the multiple is very, very close to that of the S&P. In fact, at one point this year we crossed above that of the S&P in terms of PE ratio. So, this is something that's being done, from economic reasons, and so I think it's obviously the reason why we continue to see outperformance in the S&P versus some of the other markets globally. All right, going into corporate action today, we've got Priceline, 21st Century Fox in the States. Nothing else here locally. We did have Clicks that was raised to overweight versus equal weight at Barclays. Also saw Richemont was rated a new hold at Deutsche Bank, but nothing that's really going to significantly move stocks. Right, we had the PMI numbers out of Japan overnight. Came in a little bit softer than prior numbers, but obviously Japan was able to rally just simply on the weekend. We have European PPI at 12, and then we've got U.S. trade balance and factory orders later this afternoon. All right, let's get into some maps. First thing we'll look at here is the Aussie future. What I wanted to show here is simply the level we are in terms of retracement. We are kind of, yesterday's close puts us right up here at about a 61% fib retracement off of the highs and off of that breakout that we had, that false breakout that we had in September. It's been a wild ride to say the least. It's been wicked on the way down, and somewhat wicked on the way up at times as well. I think that we're going to get to see more of this over the near term. Obviously with with this kind of volatility, comes more volatility on the back of it. So just watch it. I think that we're getting up sort of close to some sort of resistance here as well. If you look on them, we're looking at a long-term daily chart here, obviously, but I think that you can mark resistance as well just north of 45,000, which is basically exactly where you can see the wick got to yesterday. Combine that with kind of where we are on fib retracements, I think we're getting kind of close to that zone. So just keep that in mind. Over the next couple of sessions, we may be getting a little bit full here. All right, and if we look at Sunlum actually made a breakout on Friday, but it hadn't broken above the intraday highs. It did make new closing highs, and then yesterday we just got a continuation of that, absolutely ripping higher. I mean, this thing, it really just looks like a little continuation, little breakout here, and probably can go significantly higher. So I think you got to be careful of these. This kind of one. I know it was as low as $60 maybe 10 sessions ago. Now we're over 70, which is, just crazy moves in market caps like this. But that's a kind of market cycle that we're in at the moment. So just be careful out there. This thing could easily get crazily overbought and be showing a 76 or 77 or something crazy like that in the next few sessions. So just be careful if you're short to that. Okay, we'll look at Astral Foods here. Dropping out of a little bit of a head and shoulder pattern. You can see as of yesterday's session, I think it's still got some nice meat on the bone, and I'd really like to see this thing come back into maybe 140 support, which is actually quite probably right around where the target is anyway. So some support down here around 140. That's about where our target is anyway from the drop of the neckline here. So just watch for ARLs potentially to come down to the 140 level. That might be a little opportunity to have a nibble. All right. Let's look at MTN. MTN again coming back up to our old friendly old resistance level here that's kind of been popular around somewhere between 246, 247 yesterday. We closed north of 245. We've continued to stay in this little range. I'm not saying that this is a place to short it. I'm just pointing it out. We've been in a very not tight range, but we've been in we kind of go vertical into the ceiling here, and then we go vertical back down into the floor, back and forth here. So just watch that level. If we do get through 247, then I think we can trade back up to all-time highs in MTN. All right, and the last one we're going to show is Anglo Gold. This thing had earnings yesterday. Obviously, you can see that enormous green bar there. I'll zoom it forward a little bit. I just wanted to see the kind of longer term setup here, making you can't call it a key reversal because yesterday didn't make new lows, but a massive reversal yesterday, and that continued on in style in the States, taking out 20 odd percent yesterday. The level is, I'm a little bit low there, I think the level is 116 and change, maybe somewhere around there is where our level is in Anglo Gold. I fully think that we're going to get up there and test that in the next couple sessions. Worst case scenario, if it gets above that, then I think this thing can actually continue on its run. The thing is, it's just made such big, it's moving in such big moves now that the price is that cheap. This thing really, I think in the month of September, from September and October, the share price halved. If you think about that, we were $180 here in September, and we traded at $90 on Friday. So sub 90 on Friday. So I mean, you think about it, we actually have in 2 months. So this thing's been beat to hell. Earnings came out really solid yesterday. I think we get above 116.50. If we get above 116.50, I'm saying, then I think the share can really tack it on. So, but nonetheless, I think that we will get up there and test this. It closed at about 111.50 last night in the States. So I think today or tomorrow, I wouldn't be surprised if we get up there and test about 116.50. And that's all for today, guys. Good luck out there.